Okay, this is another account, and here there are 17 coins being traded. Started just, I think, 2 days back or 3 days back. So let's look at one of these coins. Let's look at the one on the top, 5. If you look at here, the amount used in each coin initially was 1,000, but right now the capital is not 1,000 anymore. It's 1,013.73. Where did this come from? Is basically the profit that this coin have made. It's automatically adding to the capital. So the next trade is basically going to be based on 1,000 and where is that? Yeah, based on 1,013. So as soon as any profits being made, whether it's a cent or it's $1 or it's a $10 or $100 added to the capital here. And then the next trade here, which is basically a percentage of the capital, is going to increase accordingly. Let me show that in an Excel sheet. It's going to be, I think, much clearer.
So Mohammed, I can't quite see that number in the initial order, but the initial order on $1,000 would be $33.90, correct?
Exactly. So let me just make this bigger. Can you see the Excel sheet?
Yep.
Trying to make this bigger. Okay. So there are 3 variables here. The first one is the capital, which we call it the balance that you're using for that coin. And then there is initial order. And then there is profit. So the balance is basically the capital. Just make it. If your capital is 1,000 or whatever, or 600, here in the initial order is going to be taking 3.39% of the capital, 3.39%. So if your capital is 1,000, what's that? Okay. Yes, here you go. So that means if this is already linked within the system, and based on the default strategy, it takes 3.39%. But if your capital is 600, it's going to be $20. If your capital is 1,000, it's going to be this much. So what happens? There is an internal formula. Let's say in here, changes the capital. Let me put the initial capital. So this is the updated balance. Updated. So the balance or the capital keeps on updating. It will be basically the profit plus the capital. So right now this bot have made, and this is going to change accordingly because it changes based on the updated balance or updated capital. So let's say in this specific scenario, the bot have made 13.7. So what happened just now is the balance increased by the amount of capital, and then accordingly the initial order have increased. And instead of being, let me just do it one more time, instead of being 33.99, now it's changed to 34.6. And the more profit it makes, the more initial amount is going to increase, the more the capital is going to increase. So that will give it the exponential factor of growing your capital. That means, let's say in 1 month time, your profit was 100. So that means your next month is going to be starting from, instead of 33.9, is going to be 37.8. Your capital is now 1,100. Let's say in 1 year time, you have made $1,000 in profit. That means your capital now is 2,000 and your initial order is going to be big. And the bigger your order value, the bigger your profit is going to be. So it's going to be increasing and increasing and increasing. Let's take this, I'll take this chance actually to go through the Coach Kin's preferred website that shows the compounding factor. Just give me a second to go to that. Okay, this is not the one. There was another one. It's called daily, monthly, and yearly. Yes, this is the one. So let's take this example right now. Let's say the capital is $10,000. Okay, the one that we start with. And now we can put some assumption here of what might be the monthly profit, the monthly profit for using EasyBot. I don't know. I don't want to put numbers here that will be taken for granted, but let's just assume. Let's assume it's 7%, just as an assumption. It could be more, it could be less, it could be way lower, it could be way higher, depending on the market movement. So let's say it's 7%, and we kept that money for 5 years. And we know the compounding is happening in a daily basis. Actually, it's happening every trade. Every trade that happens, it increases the capital. So it's daily compounding happening. This is the biggest effect that is going to happen here. So now let's calculate and see in 5 years how much that capital is going to be if it applies the same, if the monthly average is 7% and we keep it for 5 years and the compounding is daily. So that means this 10,000 is turning into 663,000. That means more than 500,000. And these are numbers. I'm not putting anything from myself. This is the numbers based on some assumptions. Assumptions might be right, may be wrong, which is basically this one, the rate, interest rate, or the profit that we're making on a monthly basis. This could be 1%, could be 2%, could be 3%, could be 5%, could be 10%, could be 20, could be 30. It depends on the strategy that you're using and depending on the market movement. So I'm just putting average of like 7%. So this is the effect of compounding. So if we don't have compounding, let me remove that compounding, and I don't know how can I remove it, but let me make it yearly instead of daily. Maybe that gives me some idea. It's 210 still, but I just want to remove it completely. I don't know if there is a way to remove this, to remove the compounding, to see how much it will be. We can do it in the Excel sheet. Yeah, let's do it here. Let's do it without compounding. The same amount, 10,000. And in monthly. Okay, let's say month 1, and then month 2. Well, it's a linear. We don't have to mention it this way. Sorry for that. So let's say the monthly profit is, again, the same way. Let's put the same assumption. Again, it's assumption. It's not something guaranteed. 7% assumption. So that means the monthly profit of the 10,000 is going to be this multiplied by this much. So in 5 years, how many months do we have? 12 multiplied by 5, that's 60 months. So we have to basically multiply the 60 by the 700. That means you're going to make $42,000 in profit in 5 years. This is without compounding. And with compounding, it was $600,000. So this is the effect of compounding. Is you're using your profit, you're adding it to the capital, and then the new capital is basically your initial capital plus the profit that you made, and then it trades that amount. That's what makes this effect of having the bigger amount. Instead of just 42,000, it's now 663,000. I hope this explains the power of compounding. Again, guys, the numbers that I mentioned are just assumptions. There's nothing guaranteed here. It's just based on the market movement. Thank you.